Thanks so much, Joe, and thanks everybody for taking the time to listen to our story. My name is Pat Donnelly, and I'm with Trilogy Metals. Oh, here's the clicker. So maybe let's talk a little bit about another metal. First, forward-looking statement. Please take a look at that. So we talked about gold, but another metal that is increasingly becoming in short supply is copper. And I don't think people realize that if we're going to have a green future, a future with clean air, and a future where we fight off the effects of global warming, we need copper. The average electric vehicle requires about 200 pounds of copper. Average house requires about also 200 pounds of copper. If you look at electric buses, that's 1,000 pounds of copper. So if we want to move away from the internal combustion engine towards clean, green energy in electric vehicles, we need copper, and we need a lot of it. And that's in the greater context of very little mine supply coming along, and also increasing urbanization rates globally. There's a strong correlation between urbanization rates, and copper demand. So just this year, even with little growth in China, we're going to be at a slight deficit or in balance for copper supply fundamentals. The next 4 or 5 years, we're going to see a major crunch. And right now is a great time to invest in copper. And even just with committed mines, it's still not going to make up for the copper demand. And the average mine that's out there needs $4 copper, and here we are around $2.75. So again, we're entering a new golden age of copper. And one of the ways is to get the Trilogy metals. So who are we? We're a developer in Alaska. We have one of the highest grade copper deposits in the world at Arctic. It's got 43 million tons at 5% copper equivalent. It's got copper, zinc, gold, lead, and silver. We also have our Bornite project across the valley. We own a mineral district, not just a project, but a whole district. On a copper equivalent basis, we have 11 billion pounds of copper. We're in Alaska. We're not in Indonesia or in Africa. We're in Namibia's a great place, but, and I've been there. I love Namibia. I didn't want to I'm always trying to stay out of trouble. Anyway, but Alaska's a great place too. A little colder than Namibia. But, and Arctic, our flagship asset, it's got a $1.4 billion net present value. If you even use $2 copper, it makes a lot of money. One way to do business in Alaska is to have a partnership with a native corporation. So we have a partnership with NANA. NANA is a multi-billion-dollar native corporation. They own the Red Dog mine. The Red Dog mine is the second or third largest zinc mine in the world. It's up in northwest Alaska, and you can see here the Northwest Arctic Borough. It's like a municipal government. The Red Dog mine supports the economy. About 90% of the tax revenue in the borough comes from the Red Dog mine. It pays for the schools, it pays for the government, it pays for the villages. 50% of the employees there are indigenous. They're Nupiaq Eskimo. So the culture there is mining. It's made a material difference in the quality of life of the people there. So it's a great place to do business, a great place to work. Rule of law, politically stable. Joe's been up there. He can talk to that. And we have very, very good support. We also have a partnership with Alaska Industrial Development Export Authority. The reason why these projects have not been developed is because we don't have infrastructure. ADA is a government-owned infrastructure bank. Its mandate is to build infrastructure to create jobs in Alaska. And currently they are permitting a road to our project. We need a 211-mile road. And just 2 weeks ago, the Bureau of Land Management filed the draft environmental impact statement for the road. And we expect the road to be fully permitted by the end of this year. This is a big, big year for the company. The big pushback on the company has always been infrastructure. We're almost over the line with that. So it's a great opportunity. So currently we're in the 45-day comment period. That'll be completed by October 15th. And we expect the final EIS probably by the end of November, and the rest of the permits for the road by the end of the year. The road will be financed and constructed by ADA using debt, and then Trilogy Metals or whoever the operator is of the mine will pay a toll, which will cover the principal and interest for the debt for the road. You can see here we need a 200-mile road connected to the Dalton Highway, and then the Dalton Highway takes us all the way down to the Port of Anchorage. The reason we're going east as opposed to west, the Port of Anchorage is open all year round, 365 days a year. It's got plenty of capacity to handle our concentrate. And also, going to the east as opposed to the west results in the road going through less sensitive wilderness area or land area. So again, 211-mile road. In 1979, Jimmy Carter passed the Alaska National Interest Conservation Act, and in that law, it stated that there shall be a transportation corridor from the Ambler mining district to the Dalton Highway. So this is enshrined in law. So again, we're very, very confident this road will be permitted by the end of the year. Finally, the last partnership is with South 32. South 32 is a multi-billion-dollar diversified base metal mining company. They're based in Perth, Australia. They're spun out of BHP Billiton about 3 years ago. We signed an agreement with them 3 years ago. And currently, we have an option agreement with them. They paid us $30 million over 3 years, which has been done. And now they have until the end of January of next year to exercise their option. If they exercise it, they get a 50% interest in our assets, but they have to contribute $150 million US into the joint venture. And we're working very, very hard with them right now to put the joint venture together, and we're very confident that this will happen. So again, great jurisdiction, great assets, and a great partner with South 32, which has a market cap of about $10 billion. Now let's talk about the fun stuff, the geology. I happen to be a geologist, but I won't bore you to death. The flagship asset is Arctic. You can see here, it's in the Ambler mineral belt. We own the whole belt. So we don't just own, one mine. We own a whole mining jurisdiction. This is a 100-kilometer long belt. Arctic is the crown jewel. We're also working at Bornite. We currently have a reserve there at 43 million tons at 5% copper equivalent. We have copper, zinc, lead, gold, and silver. It's one of the highest grade copper projects in the world. You can see here, it sits on the side of a mountain. We're going to mine it with open pit methods. It's pretty straightforward. Economics are simply outstanding. At $3 copper, we have a after-tax net present value of $1.4 billion. After-tax IRR of 33%, and our cash cost net of byproducts is 15 cents a pound. So again, even if you hate copper, this thing makes money. It makes a lot of money. It's going to produce about $450 million a year in free cash flow. So again, one of the highest grade projects in the world. You can see here we're in the entire belt. We own dozens of prospects and historical resources. We did some drilling at Sunshine, and we're going to have results on that soon. So again, this is another Flin-Flon or an Iberian pyrite belt. We own a whole mining jurisdiction, not just one mine. So we've been working at Arctic, but we also been working at Bornite across the valley. It's a carbonate-hosted copper deposit, has copper and some cobalt. We drilled 10 holes there this year. There's the camp, and we expect to have a new resource on that later next year. Mineralization is completely wide open there, so that would be our second flagship asset. So we drilled there. It's open at depth. We have about 125 million tons at 1% open pit, and about 60 million tons at 3% copper underground. And we're still drilling, and we're still finding mineralization. We drilled 10 holes this year, and we'll have those results out fairly soon. So just in conclusion, we have a lot of catalysts. We have $36 million in the bank. We don't need to raise money. We have plenty of money. We're going to have lots of drilling results. We're continuing with the BLM and ADA on permitting the road, which will be done by the end of the year. We're going to start the Arctic feasibility study, and we'll have that completed early next year, and also the South 32 agreement. So again, lots of catalysts, and we have money. And just in terms of valuation, if you look at Arizona Mining, for example, that was acquired last year also by South 32 for $1.6 billion. It's a lead zinc deposit, but if you convert the lead zinc to copper, we're similar size and similar grade. to Arizona mining. So again, I don't think we're going to be around in the next 2 or 3 years. I think South 32 will exercise a joint venture. They'll put the $150 million in, and then eventually we'll be gone. Our share price is down about 50% in the last couple of months, and I went and bought some shares in the market, and it's a tremendous, tremendous opportunity to get in. Again, big catalyst coming up, and like I said, we're well financed. So I'll leave it at that. I got 20 seconds left. Wow, it's amazing. I always talk too much. So I'll leave it at that, and thank you for your time. And again, thank you, Joe, for having me up here, and have a great weekend.